Let's break down Corsair Gaming on a fundamental level as well as a technical level. First, the fun part is the chart over the past few days. Tuesday, when the market opens, is going to be very, very interesting. These shorts got their face ripped off, and the pre-market's going to be important. Of course, they're going to put a fight up. If they lose that battle in the pre-market, look out during the first 30 minutes of trading, which you saw here. The reason why this level is important, that was the original resistance level. You're seeing, a little bit of a breakout. That was the short squeeze. But if we, in earnest, get above $8, that is a significant sign. Just so you understand how this business has traded over time, it IPO'd at $17 and it went to 51 over the gaming frenzy in 2020, and it's been straight downhill since. This was a very popular ticker in 2020. People know about it. People have forgotten about it. I want you to notice that volume there. It's the second biggest volume day of all time. This stock is sold 17% short, and 58% of the float is in the hands of insiders, meaning they can't really sell. 52% is owned by one private equity company. If they even sell 10%, they're going to tank the value of their entire business. They are not in it for immediate liquidity. It is a compounder, and I'm going to show you the fundamentals next. The market cap here is $723 million, and as you can see, there is no PE ratio. Trailing 12 months is loss of 12 cents. But that hides what's happening, as they had 22 cents of earnings per share. This is a seasonally big quarter. This is December for a company that does gaming historically. Obviously, that's their best quarter. But if you look back 12 months ago, they were barely profitable during this quarter, and they were negative every other quarter. Their gross margin was 28.9%, which was a full 400 basis points better than last year. Their gaming segment grew well last year, led by memory and components. Now, you would say this is just prices being higher for these parts, but with their gross margins improving, you're like, wait a minute. Their profitability was actually higher than the high end of their guidance. But the midpoint of their guidance was down 4%. This is a company that's beating the high end, so you can expect some growth, I believe. And their commentary about demand destruction for these components, I believe, is tremendously conservative. I think that consumers are going to pay the price increases of RAM as they have done over the past year. And for the first time ever, they're doing a 50 million stock repurchase program. That is 6% at current price of outstanding shares. But remember, 58% is held by insiders. And with 17% sold short, you're talking about a large chunk of the true float, probably 14-15%. For anyone interested in small cap stocks, I hope I'm not blowing up David Pascal too much. If you are polite and you send questions to their investor relations team, they're usually pretty accommodative. I am personally going to reach out on Tuesday. Friday was a busy day, so I gave them a break because they just came out with this blowout quarter. Going back to the income statement, they're investing in their sales team, and that is to go direct to consumer to improve margins further. They have some debt. They have delevered. They're paying about $2 million per quarter in interest. And then again, they're drastically improving margins, and it's not coming from the mouses and the keyboards and the headsets. That's staying about flat. It is coming from gaming components and systems. So build your own PCs. And pre-built rigs, we're going to get into that in a second. As far as the cash flow goes, $38 million generated by operating activities. That is operating cash flow. Accounts payable went down. Inventories went down. So change of working capital is, what did I have it at? Approximately 20 million. So this is, about 55 million. Same as it was a year ago. But again, this looks like it was higher. So I would have to go into the model to see that. They did have PP&E of the last year of 15 million, which is reasonable. Their price to free cash flow right now at $7. It's actually a little bit below $7. I just know the $7 number is about 9 times free cash flow. And SBC is $33 million over the past year. That is a little high for sure, but the buyback more than covers that. Now here's the narrative that the analysts are not talking about at all, having done channel checks, is that this is actually an AI play, and everyone's focused on the data centers. And I love small silent components of the data centers, think coherent, think CMI. But with local models in 2026, that's going to be a huge story. The distribution of compute, whether it's a small business having a $50,000, $60,000 server in order to run a $1 trillion parameter model off of it and on top of all of their business processes, because cloud is kind of expensive. And when overnight you can have it sort of self-improve and train and run inference for your business, but it's also happening in the home. So I'm getting this Corsair Gaming AI workstation, which is $2,500. They've raised that price $500 over the past 8 months, which makes sense because of the RAM approvals. And this has, incredibly, 128 gigabytes of unified RAM. For $2,500, you can run a 70 billion parameter model. And there's a huge jump up from 30 billion to 70 billion. Below 30 billion is basically not usable. It hallucinates too much. Like you'll spend more time trying to fix it than it's worth. 70 billion is legit. And it also has a lot of system RAM so that you can do other things on it. Now, this is not a tailored gaming PC, but it can run at 1440p, and as well as, its real strong suits are rendering if you're creative, or running a local model. And again, for $2,500, this is the cheapest you're gonna get, having tried very hard to find a solution, unless you buy straight out of China, and then you're only getting a 10% discount, and it's such a headache to deal with Chinese companies. So I think that this company that is guiding for 4% negative growth, but still like incredible profitability, that makes it a 10 forward PE, 9 forward free cash flow, and 7.5 forward EBITDA. I think that it's going to flip to growth, potentially 10 to 15%. All you have to do is sell 1,000 units of that AI workstation, and all of a sudden you're back to growth. I think that's going to be a big component of it. And then the Logitech angle, like this is all better stuff, a little bit more pricey keyboards and stuff than Logitech. I'm realizing, damn, like I had an Apple Basics keyboard, and the Logitech's so much better. You're going to see people invest in their little, mouses and stuff, and they have sick mouses there because they're using it so much. I'm like, I only spent $30 on this. Like, I wish I kind of spent more, because this is so much better improvement over the Amazon Basics one that I just had that's now on my Raspberry Pi. So I think this whole business is going to flip to growth. Profitability is strong. They're conservative on guidance, and the analysts don't get it, and it's highly shorted, and it's a boring business. That's the type of stocks that I want to own right now. I don't want to own the popular AI stocks that everyone's heard of and everyone's crowded into. I want to own the businesses that are almost embarrassing to pitch. And I've gotten amazing feedback on this idea from hedge fund guys. They're like, oh, that's interesting. I would have never thought to look at that. And that's exactly how it goes. This ticker, Corsair Gaming, was popular back in 2020 in the retail crowd. I think it could flip to popular very soon, right? People are asking me, oh, do you still like it now that it's up, 50% or 30%? When I came out with my Substack piece, and it's like, yeah, guys, it's still cheap. Fair value right now at this price is $15. And I think we could get there in a hurry if this squeeze continues. So look in the pre-market, the way you want to trade this thing. In the pre-market, you might see some action like this. This was a lot of volume after the print, and it sort of goes down, and all of a sudden the card starts catching a bid, right? So let's sort of start from right here when you start seeing this happening. Okay, this is starting at 6 a.m., so early in the pre-market, and some volume picking up fairly high around the lows. And again, people are just trying to figure this out. Again, you're seeing the volume pour in. At this point, it's about 8 a.m. And then the open, 30 minutes the open, this is 9 a.m. Eastern. Sells off a little bit into it. That makes perfect sense. And this is the open. Boom. Just absolutely rips faces off. Right? This is what happened when you have a highly shorted stock. It's been beaten down for so long and is so cheap. And this was the peak of the day at 7.6. The market fell off. So then it started sort of peeling back, and it ended up going below $7. And I was like, okay, I'm going to start adding here. Went down to 7.3, and then it stabilized. And for the rest of the day, it sort of chopped around, had another push to 7.2 actually. Speeding this up, 7.3, chopped around, and it ended closed at 6.8-ish. This has true squeeze potential if you want to trade it with my guys. Discord is available to you. Also, the deep dive, the research is on Substack.